shall begin. So, good afternoon. Good afternoon, and thank you for joining us on today's Lender Spotlight with Market Financial Solutions. My name's Jordan, and I'm the Lender Relationship Manager at Knowledge Bank. I am joined by Zahira Fayaz, so the Senior BDM for MFS this afternoon even. I'm at it again. MFS offer a range of bridging loans from their in-house funds and more recently buy-to-let mortgage products to provide more options between bridging loan exits or initial purchases and future long-term financing. Zahira will soon discuss the trends that they've spotted for foreign nationals in 2022 so far, how specialist finance can help foreign nationals with the complexities that they're facing, and how to recognise when to bring in a specialist lender. We'll then move on to Q&A, where I'll be putting your questions to a live. So if you do have any questions or cases that you're looking to place, then let us know in the Q&A at the bottom of the screen. We'll answer as many as we can, and we'll also pass them over to MFS afterwards so they can get back to you directly. There'll be 3 polls throughout the session today. The first one has already happened when you came through the door, so thank you for answering that. And if you could answer the other 2 as they appear, that would be fab. We should be here for around 45 minutes to an hour, and you will receive your confirmation of attendance email from Knowledge Bank over the next few days. So, Zahira, good afternoon.
Good afternoon, Jordan.
3 questions, if that's okay. Firstly, foreign nationals, what's happening? Secondly, knock-on effects. Is there any knock-on effects from what's happening with that? And then third and finally, what differs you from other lenders that allows you to bring foreign nationals onto your platform?
Fantastic. Do you want me to go through it now with you?
You can go do your presentation and answer that first, and we can come back to it after if you wish.
I mean, I'm more than happy to answer it, but I think maybe I can kind of answer these questions as I go along in the presentation.
Yeah, that's absolutely
and then at the end, we can do a bit more of a comprehensive Q&A. And because the questions you've asked, we very much answer them throughout the presentation. I think it will be very interesting for a lot of people as well. So should we begin?
Sure.
Oh, fantastic. So hi, everybody. Thank you for allowing me to present to you today. I sincerely appreciate it. My name is Zahira Fayaz. I am a senior BDM for MFS, and we are a specialist lender within the bridging and buy-to-let space. Today, I'll be going through where we sit in terms of the market for foreign nationals, where we can support clients who are looking to purchase real estate in the UK, and also, as Jordan mentioned, where we differentiate from other lenders potentially to support your clients. So I think the first thing we'd like to do is trends for foreign nationals. I think the first thing at Market Financial Solutions, what we do is we like to do a lot of market research and understand where the market is at. And I think one thing we've recently noticed is Halifax has released some data in regards to an average UK house price between January 2021 and January 2022, as you can see. And there's been a significant increase, just shy of 10% at 9.7%, an annual increase in terms of the average house price increasing, which is roughly around £24,500. Now, this data is very, very imperative purely because we have come out of a pandemic, essentially, and to see such a strong, significant growth in that time frame solidifies where the UK housing market is. And I think that has definitely been a very important factor in purchasers buying in the UK real estate market. We've also got some data from Knight Frank, and their data has released that the number of new prospective buyers in January 2022 jumped up to 54% above the UK's 5-year average, which is a very, very steep number. And when you focus that more on a more microclimate in prime central London, that new buyer figure actually is up to 72%. And we believe that the blend of those people buying are predominantly more towards the foreign nationals, because London is a very cosmopolitan city. It holds a lot of significance for businesses, for students, for people looking to holiday. And I think what we've realized is we are going to see a growth trajectory within the housing market in the coming months, and that's going to come to fruition in especially during Q2, Q3, Q4 over this coming year. And I think it's very much rooted in the fact that we've got foreign nationals who are definitely gearing up to come back to the UK housing market. And it could be for a number of factors. It could be from a buy-to-let investment perspective, where people want to have buy-to-let investment properties in the UK, as it's such a solid market. It's reflected in the data that we've just spoken about. It could be to have a pied à terre in the city, where people come in and have a holiday home in London, in the Cotswolds, and wherever you want. And I think as well, it could be as well, especially particularly in prime central London, you do find a lot of investment where people purchase properties for their children who are studying in London. And also, as it said, it will kind of just move on to a buy-to-let investment because it has such a strong market, and the data is reflecting that. And I think moving forward, once going into 2022, our independent research also shows that 20% of existing property owners either intend to sell or buy a new home or buy an additional investment property. So what we're finding is seasoned property developers, from high net worth individuals to everyday people, are coming in and looking to purchase, a strong asset class, very much bricks and mortar related, because they can identify the growth prospects of their investments in the UK market, specifically in prime central London. So we've also, as at MFS, have actually seen that growth trajectory in the number of inquiries that we're seeing from foreign nationals that are looking to purchase in the UK. So I think it has had a direct knock-on effect in terms of the market, the strong housing market, and then the kind of bounce back to London, the interest, the figures, and it's all kind of amalgamated into one, and here we are today. And I think moving forward, where MFS can really, help foreign nationals purchase, and where specialist finance can really support them, is very much what I'd like to touch upon. So specialist finance is either a long or short-term loan, and it's designed to support a non-standard property potentially, or equally a non-standard client. They're kind of two remits that we can support if you do either fall into one of the categories. So a non-standard property, as you can see, could be prime central London, single high asset values in London, HMOs, more than 6 rooms, multi-unit blocks, large mixed portfolios above 4 million, flats above commercial, ex-local authority, or even holiday lets. And a non-standard client could be somebody with adverse credit, no UK bank account or credit footprint. I think this point I will touch upon in more detail as we go along, as this is very relevant to foreign nationals who are looking to purchase. But your professionals statuses or portfolios, offshore statuses, a large funding requirement, or property development and trading businesses. So MFS can really support anyone who fits in those brackets or fits in those structures or property types and everything. So I think there might be a bit of a lack of knowledge in terms of where we can support. And I think this seminar will really allow you to understand that we actually do allow a diverse range of products and circumstances to allow us to lend, and be happy to go through some more Q&As later on. So a lot of complexities that foreign nationals face is they can't necessarily get funding purely because of their credit footprint or their status or what have you. They can't get it done quickly because a lot of lenders are quite apprehensive. I mean, from our perspective, we can have funds with the client within as little as 3 days. We don't have a criteria where we differentiate essentially really from foreign nationals to UK nationals. When it comes to bridging finance, there are certain things that we wouldn't necessarily need, like a UK bank account, but on a buy-to-let mortgage or a 2 to 3 year term product, there will be a requirement for that, but more than happy to go further into detail with that. We also, as mentioned in the previous slide, we can do a lot of complex deals, structures, natures. So we're very, very flexible. We have a very flexible approach to when we look at a deal. I think the best way to I would say is when a deal comes through, we review each deal on a case-by-case basis. It's not a computer says no model. It's very much like, let's see how we can support the client. Let's see how we can make this fit for purpose. Let's see where we can support them, as we are not restricted to covenants where, because the client doesn't have a UK footprint, we automatically says no. It's nowhere near that. We actually look at the deal. We're very much bricks and mortar based, and we see how we can help the client. And I think the other thing is, for our service is key. It's absolute key when dealing within our market. And for us, that means about being reliable and being trustworthy and building that transparent relationship with our brokers and our clients. So when we say yes, we mean it. And we support that because we do a lot of our underwriting upfront. So how the process essentially works is, if you have a deal and what we would typically do is you send it over to someone like myself, the BDM. We will review the deal for you. If we think it's fit for purpose, we get it sent over to our underwriting team, and we'll get indicative sent out to you within a 4-hour SLA period. And at that point, we also do request information in order for us to take the deal to credit. And we do this because we do all our underwriting upfront, which allows us to say yes. And when we say yes, we mean it. So what that means is there's not going to be any huge tangible changes later on down the line. It's very much the client, the broker, everybody's on the same page right from the onset, so that we move forward, and we move forward quickly. And it allows us to be so much more efficient and build that relationship and that confidence through all stakeholders involved. I'd like to go through a case study with yourself, and this will kind of give you much more of a flavor in understanding how we mitigate risk, how we look at deals, how we can support the clients. And it's very much, it kind of incorporates quite a lot of facets which a lot of foreign nationals do deal with in terms of complex situations. So what we did is we had a deal come through from Knight Frank Finance, and it was a hotel and spa. It required renovation. Now, the complexities to this deal was it was a grade 2 listed building. 2 of the clients were based overseas, and it required a tight deadline. And where we came in at as a loan to value was at 50%, loan amount at 943 against the property value of 1.9 million. This deal was very, very interesting because when it first came through, the broker had got sight of this deal after it had been in the market for a while, because a lot of lenders couldn't get comfortable with the structure, with the listed building, and also with some of other complexities that I'll go through now. So we had to move quickly to ensure that building regulations for the property were being upheld due to its grading, as mentioned. There was also some legal structures that we needed to get mitigated right on the onset regarding the lease. So we got our lawyers involved very, very quickly in order to ensure that it was very much fit for purpose. And it kind of plays into the point of us underwriting the deal up front. So it's not done at the latter end. And it just allows us to make a much more informed decision, and it allows us to mitigate the deal very early on. And we took a commercial view on the asset, and we're comfortable with the clauses because in terms of the actual asset, it's a beautiful building. It just required some renovations. In terms of the way we approached the deal was much more holistic rather than just like a tick box exercise. And it allowed us to actually support the client when they really needed it. And we managed to do it very, very quickly. I think some of the feedback we got from the client was, especially regarding the leases, where a lot of lenders couldn't get comfortable, we came in pretty much right on the onset to say, yeah, we're we're happy with this, we're happy to move ahead. And it completely changed the transaction from our perspective and also from the brokers, because we worked very, very closely with her. She was fantastic. We ensured that all the parties remained updated and informed throughout the course of the completion, throughout the whole process. There was clear lines of communication, and we very much took a flexible approach and actually met the client's deadlines. And it incorporated the fact that 2 of the clients weren't even based in the UK. So we managed to get around that. And it just allowed us to support them when they needed to purchase this property as soon as possible. So very, very, all the parties involved were happy. And I think it just highlights the strength of MFS when it comes to dealing with some complex situations. We don't have a model that says no, we have a model that says, how can we make this work, essentially. So that was a case study I wanted to go through with you. As I said, as I mentioned, it incorporates many different facets of complex situations. And to mention in terms of the foreign nationals, which is relevant to this webinar, one was based in the Middle East and one was in South Asia. So it also allows you to understand the broad spectrum of countries that we can work with. And we don't have an issue where you could be in Hong Kong, you could be in India, you could be in France, in the US. It's very much about how the bricks and mortar value of the property stands, how we can make it work, and how we can lend to you. So I think at MFS, where we differentiate from other lenders is our agile approach to looking at deals. So adaptation is key. This market in specialist finance is a very dynamic, ever-changing market. So things can be different from today into 2 weeks, into 2 months. So I'm sure you all appreciate the issues that everybody can face. One day someone can say yes, the other day they say no. And for us, it's all about that communication. We provide a list of exactly what's needed to get the case through. So when you bring the deal to myself, for argument's sake, as I said, we'll send over information that we need so we can take it to credit, and it allows us to move very, very quickly. And this is kind of the backbone in terms of our service. It's very much based on being able to facilitate what the client needs and to do it right at the beginning. The other thing is as well is when you're dealing with clients who live in different time zones, we've got people at hand when needed. We have people working in different cities, so it allows us to monitor and work to a very high standard of service to make sure that someone's always at hand when needed. We also have a very good solicitor panel, and that allows us to ensure we can meet tight deadlines, because we're very much on the ball when it comes to managing that relationship and moving it forward. For us, service is key. So our solicitors very much honor our timescales, our tight deadlines, and it allows us to move quickly, because especially if you've got a client sitting in Dubai, for argument's sake, and notice has been served on a property they may have exchanged on, and they need to move very quickly. We've got a 10-day time frame to do it. We very much put our solicitors right on the forefront of that and get that moving quickly. So it's about having that relationship with the right stakeholders as well. So, and we have perfected that purely because we've been around for over 15 years now, and we've got a very good relationship with our solicitor panel. So yeah, I think it's more about showing you how we can support you, not just saying, oh, we can do this and we're doing that, and how we do it, essentially. So another thing I think in terms of foreign nationals and the difficulties that they may face is what lenders won't do, and kind of the structures of where lenders kind of get a bit apprehensive when it comes to lending. So we have found from our research that holiday lets people get a bit uncomfortable with, and the UK recently has seen a 40% jump in staycations in the UK alone post-COVID. So we definitely understand that this market of holiday lets is a very growing market, and definitely something that we can support, because we understand the macroeconomic situation, we understand where the market sits, and we understand that where we can come in and support people. And I think this is kind of testament to us as a lender in terms of market research, where you do in terms of the information that we are familiar with, and also moving and being agile to the market, and not necessarily being reactive but proactive to the changes that are happening in 2022. So holiday lets, commercial properties, sometimes they don't get comfortable with it. Foreign nationals, offshore companies, or complex ownerships. So that case study we mentioned, that was a complex ownership. There was two different foreign nationals from different countries. They were set up in an SPV that was not UK based. So we managed to get around that. Another thing that a lot of lenders don't like to do is doing a high loan to value, say up to 75%, and high lending combined. So we can get comfortable with the higher loan to value, the large loans. Those we can get very comfortable with that, because for us it's about supporting the client, but also making sure that the properties that we're lending against are fit for purpose and they meet the necessarily stress tests that we do. And finally, obviously, clients with no UK footprint. I think this is the biggest issue that clients face, foreign nationals face, when it comes to buying in the UK. So as mentioned before, we're a specialist bridging lender, so we can help you do purchase acquisitions, refinances, anything like that, or where you might need to do a bridge loan in order to simplify an ownership, for argument's sake, or get planning in place. There's so many different variables involved when it comes to doing a bridge. And when it comes to doing something like that, we don't even need you to have a UK bank account. For us, it's about making sure that the asset is fit for purpose. So it's all about ensuring that we can support you and underwrite right from the beginning. So and also I think when we underwrite right at the beginning, it allows us to find a solution for any potential complications that the deal has, and it just means that we're all on the same page, and it allows breathing space when needed, when it comes to more complex deals. So in terms of the case study that was mentioned before, it was to provide breathing space to pay contractors and support clients with their future renovation works, for the spa and everything. It could be so many different variables when it comes to anything that comes through. And I think the differentiation that you will have in terms of UK bank accounts is on our buy-to-let product. We do require a UK bank account, but there are several different options that you can use that just essentially needs an account that allows you to do a direct debit, purely because the buy-to-let is a term product and it's not a bridge where it would need to be a monthly direct debit would need to be paid. So there is a slight differentiation between the two products, and that is, on the bridging, you don't need a UK footprint or you don't need a UK bank account, and on the buy-to-let, equally, you do not require a UK footprint, but you will require a bank account at time of completion, and that's just to service the direct debit for the property. So if you see there, you can scan your phones onto the QR code, and it allows you to download our comprehensive lending guides for our bespoke bridging finance and also for our specialist buy-to-let mortgages. When it comes to the overall picture of what a foreign national looks like, for us, there's no issue in terms of what countries you are coming from, where you're based, where you're buying. The only thing that I think needs to be quite apparent is we can't lend to another asset abroad. So it will have to be a UK based asset, whether it's London or York or Manchester, Birmingham, it's fine. We lend anywhere in mainland England and Wales. We don't do Scotland, and we don't do the islands around. But if you are looking to purchase a property in England or Wales, very much so we can help you with. And I think the only foreign nationals we may not be able to lend to are those who are on sanctioned countries list. However, as I said, we do look at every deal on a case-by-case basis. So please feel free to send them through, and we can still see how we can make it work for the client. Because for us, it's about making sure that we're flexible and we look at each deal on a comprehensive basis. And I think that essentially concludes the presentation, and please feel free to ask any questions.
Fantastic. Thank you very much. Thank you, Paul, for getting the poll up there as well. Zaira, can you hear me? I'll take that as a no. So what I'm going to do, guys, is I am going to send the questions to Sarah as I read
Yeah, so I can't hear you, Jordan,
You-
but I can see the chat box, so I'll answer any questions through that. So,
There we
the
go.
first
There
question
we
I've
go.
got is, I'll read them out just so that we're clear on both pages. So, do you allow lending to clients from Pakistan? If so, how do you deal with those clients with no UK bank account? Can one be set up with a correspondence bank to their existing bankers in Pakistan? So, yes, firstly, we do lend to clients in Pakistan. That is not a problem. If they are looking to do a bridging loan, then no, we wouldn't require them to have a bank account set up. What we would do is we base it on, and then we can use their Pakistani bank accounts in order to do the deal. So that's not a problem. The only thing they will require is solicitors who are based in the UK and a minimum of 2 SR registered solicitors. So that is essentially what we would just need. But if they do want to do a buy-to-let term product, then we would require them to set up a UK bank account. We would not be able to use a Pakistani bank account unless the facility allows them to set up a direct debit mandate through their account, which in all honesty, I don't think I have seen. So it would be more beneficial for them to set up a basic account that allows them to just have a direct debit set up. They won't need it for any other purpose. I hope that answers that question.
Thank you. I'm talking like you can hear me. Bear with me. So what I'll do is just follow up in our chat box. So with me 2 seconds, guys. I'm juggling everything here. So we've got Rudy,
Okay.
who's got a Middle Eastern buyer.
Firstly, I'll answer, would your debt to income ratio of over 100%? So I think what I will say is, for the buy to let perspective, we will require 120% ICR stress test to be done. Now, on our buy to let product, it's a very exciting product because we don't actually use we use a very creative model to do that. So how we do that is, if the rental income actually doesn't meet the stress test, we can use deferred interest up to 1 to 1.5% to allow us to make the model more fit for purpose. We can also retain interest up to 9 months. And if the rental income is still short, we can use top slicing. So for instance, let's say for argument's sake, you are a French national and you're short by £20 a month, for argument's sake, we can use your income, and that was where the bank account would come into play. So we use 3 different metrics to make the ICR be hit, which is 120% across the board. That's irrelevant of whether you're a higher rate taxpayer, whether you're for a national, whether you've got adverse. It's across the board. I hope that answers that question. So the next question is, do you have a minimum loan amount for your term loans? Yes, our minimum loan amount is 150,000. Our maximum loan is 3 million per property, but we can do a portfolio of up to 7.5 million, potentially 10 million for one individual client on a referral basis. So minimum 150,000, maximum 3 million on one property. On a portfolio, we can go up to 7.5 to 10 million. Next question. So Rudy has a Middle Eastern buyer based in Egypt, purchasing 1.25 new build flat. Yeah, we can do that. So Egypt is fine to lend to. That's not a problem. If they're purchasing a 1.25 million new build flat, we can do that either as a bridge if they want to do it as acquisition, or we can do it up to a term loan up to 3 years. So it allows them to realize their actual income, and then should they want to move on to a longer term 5-year, 10-year product, up to them. But also what we find is sometimes our clients are actually preferring the fact that these aren't up to 5 years, purely because it gives them flexibility should they want to change their mind to sell the property or go on to a longer term. Several people asking about Chinese nationals and Hong Kong-based clients buying a buy-to-let in the UK. Yeah, that's absolutely fine. We can lend to Chinese nationals and Hong Kong-based clients. Not a problem. We've actually doing a lot of work with them in terms of London properties and also Manchester. There's been a huge influx. So from our own internal inquiry system, we're doing a lot with Chinese and Hong Kong clients. So Lindsay has a client who works for a global company and has been in the country for less than 1 year. Yeah, that's fine. That's actually probably easier because they probably have a UK footprint. Our buy-to-let term product is on a 4-tiered basis. So I believe that on the barcodes, you would have been able to download them. But there's a 4-tiered product, so yeah, that's not a problem. If you've been in the country for less than 1 year and you have a bank account, we can easily do a bridge or a buy-to-let, not a problem. So we have another question. Applicant is a foreign national but had a business in the UK. He has property purchased outright and wants to convert into a buy-to-let and raise capital purchase to buy another buy-to-let. He's from Kenya and has a business visa. Yeah, that's fine. We can do that. So if the client has businesses in the UK, he has credit footprint in the UK, and he's bought the property unencumbered, that's absolutely fine, and wants to go into a buy-to-let and use the capital raised to purchase another buy-to-let, we can absolutely do that. If he's from Kenya, that's not a problem, and has a business visa, that's fine. We will obviously take view on how long the visa lasts for, but in terms of foreign, even if the visa expires, that's not a problem because it's based on the actual property values and the asset itself, and the rental income and the ICR. So from a buy-to-let perspective, we can do the capital raise to purchase another one, and we can do 2 buy-to-lets for each property. So another question we've got is, when it comes to visas, a few people have mentioned their clients are coming here on a special visa. What difference would the client being in the UK on a visa make rather than them being based in the country of origin, and what visa status would you require? So if we're doing a buy-to-let product, actually, if we're doing both bridging or buy-to-let, the visa isn't necessarily an issue purely because it depends on the exit of what they're going to do. So if the property is going to be sold and they purchase a property a while ago and exit is going to be sell, that's the visa won't come into it. The visa will only really become more important is if the client was looking to service the debt on a bridging perspective. So even if they had a buy-to-let, the visa wouldn't make a difference because we don't lend against the visa requirement. We lend based on the property. So in terms of country of origin and what visa status, it doesn't actually make a difference. It only makes a difference if they are looking to service a debt on a bridging basis, because we will require that to be in, we will require them to be here. But in all honesty, there's a workaround for everything. So from that perspective, I would not get too worried about what the visa status is and what country of origin. I think the only time the country of origin becomes important is if you are a sanctioned country, for argument's sake. So then we would have to take a view, but we would still say send the deal over and we'll see what we can do for you. So one of the people have said that one of the applicants does not have indefinite leave to remain. Yeah, that's fine. That's fine. It's not a problem. So we have a question. Do you accept contract assigned at a lower price than original purchase price? That's a very, very good question. So if, say, the market value is 1.5 million for a property, but the client is purchasing it for 1.3 million, we will always lend against the lower value. So we would lend against the 1.3 million price rather than the market value or contract assigned price, purely because the debt will always be based on what the client is putting in. So the loan to value metrics will always work based on what they are purchasing the property for. So if they purchase for 1.3 million and the market value is 1.5 million, there's 200k hope value in there, and that will become very, very important for the client, especially when they look to do a refinance or to exit. But from a acquisition perspective, we'll always go on the lower amount. So we have a question saying, a few people saying that the no UK bank account is a problem. What are your needs for that? I mean, we can support you in terms of looking for bank accounts that allow foreign nationals to set up a basic bank account. There are several different options are available. I think the best thing would be if yourself or your broker to look into those options. We can also support you in that, but the bank account only becomes relevant on the buy-to-let. So, and that will have to be done at completion. So let's say it might take 4 weeks to do a deal. We do have 4 weeks for you to get that done. That doesn't have to be done right at the beginning. It just has to be done on completion, which should be enough time for you to be able to set up a bank account, because there are banks that do offer very basic accounts to allow you to have a direct debit. So it's just a matter of actually having a look and seeing what's out there in the market in terms of that. Adverse credit. Do you conduct credit searches? So yeah, what we would require in any deal that comes through, whether it's bridging or buy to let, is for the client to provide a credit report. If they are a foreign national and they don't have any, then that's fine. That's not a problem because there's no UK footprint. But if they are a UK based client and they have got adverse credit, we would require the client to clear the credit, the adverse credit. So for argument's sake, if it's, I don't know, a £5,000 CCJ that they've got registered against their name, we can actually help them put that part of the loan, put that £5,000 towards clearing the CCJ off. So we can do the adverse clients, but they would be required to clear off any adverse credit that's registered against them. If it's something like a British gas bill or a like T-Mobile EE bill, sorry, I'm going back years, showing my age right now. Then that's something we can take a view on. That's something very different. But anything that's a substantial amount would need to be cleared. So yes. Contract signed. Do you require the original seller's AML? Because I have a deal where the lender needs to see the seller's. No. So we don't have a requirement to see the vendor or seller's AML because we're not doing the due diligence on them. The due diligence and the KYC will only be based on the actual purchaser. We don't have any restrictive covenants where the client where we do it on the vendor, because at the end of the day, they're the ones selling the property. So that will be taken up between the solicitors between the buyer and the seller solicitors. But from our perspective, we're not lending to that entity. So no, we don't require that. Have another question. We have a client living in USA and is a homeowner there, and they're looking for a remortgage for a house in the UK. They did live in it when residing in the UK. They have dual nationality with a Ghanaian passport. Would you consider looking for 75% loan to value if possible? So the client is living in the UK and is a homeowner there, but they're looking for a remortgage for a house they did live in. If it's for a buy to let, yes, we can do it based on the Ghanaian nationality. That's not a problem, and we can look for 75% loan to value. It just might not be on the tiered, in terms of the tiered product, we might not be on the lowest amount. It would just be on the mid-tiered product, but yeah, we can do that. Russians are a no-go. Currently, yes, obviously with the current climate, I'm not going to delve too much into the situation obviously that's going on, but working with Russian nationals at the moment is something that we are taking government guidance on, so not at the moment. We have a client whose income is in US dollars. What is our stance? Yeah, in terms of foreign income. So yeah, absolutely. If you have a client who gets paid, we do actually see quite a few of those, especially clients who work in like banks abroad. A lot of them get paid in the US dollars because of the national current. That's the kind of, global currency that everybody uses. We don't have an issue from that. The income will only become relevant if we either top slice on a deal, which is very, very it's not necessarily used a lot. So that's the only time, or if we do a bridging deal where the client is servicing the debt. But 95% of the time, no, the income is not a problem. So we can do that. We have another client saying verification of income is causing issues when it comes to placing cases for foreign nationals. What are our processes and requirements when it comes to verifying income? As mentioned, actually, onto the income doesn't necessarily need to be verified unless we are servicing a debt. So from a bridging perspective, only if there's like a commercial property that they're purchasing, for argument's sake, they're buying I don't know, an old Tesco's, and they're going to run a retail store from it, and they want to service the bridging loan to realize the actual income. That's only when we will need to see the income. If not, but even if it's from a buy to let perspective, but the rental 120% ICR is hit, we don't require it. So in terms of verifying income, it's only in certain cases. And when we do those, it will only be to make sure that they can service the debt. So we can use your income based in Singapore, US, what have you. It's not a problem. We would just have to see sight of your bank accounts in your respective country to verify that. So max loan to value and specific SIC codes needed for a limited company on application. So max loan to value, we can go up to 75%. And in terms of specific SIC codes, we don't adhere to that. That's not a problem, because typically the limited companies that are set up, or SPVs are set up for the property, are usually for the property. If they're going to be doing it in a business or in a commercial unit, that it's not we don't subscribe to the SIC code, so it's fine. We can do any of them. So that's not something we need to worry about. Do you have a minimum required income for buy to let, please? No, we don't. So the only time we would require the income is if the rental ICR is not hit. So for instance, an example would be, let's say you have a 1 million pound property, the rental income is £3,000 per month, and the ICR needs to be at £3,250 per month. We would first use deferred interest to bring it down, or also use retained interest. So then that will make the ICR fit for purpose. If there is still a shortfall of, say, £50 a month, for argument's sake, that's when the client's income would be relevant. And as long as they have a minimum of £50 that they can afford to pay, that's when it comes down to. It's very much done on a case-by-case basis. So just a few more questions, because I do believe we are coming up to an end to the thing. So I'll try to answer as quickly as possible. We have a client that says she needs at least one applicant to be British. Is that the same with MFS? No, it can be both foreign nationals, not a problem. And do we look at consumer buy-to-lets? No, we don't. So I think we have one more question. Do you do term loans for commercial premises? Not at the moment. However, do watch this space. We are looking to get into the commercial term loan, hopefully later on in the year. So please watch this space. But yes, I think that concludes all the questions. So yes.
Thank you very much indeed. Just a reminder as well, Zara can't actually hear me, so it's all fun and games. I know I've been sat here very quietly for the past kind of 10-15 minutes, but I am doing something behind the scenes, I promise. So thank you, Paul, for getting the last poll on screen. Like I say, unfortunately, that is all we've got time for today. Apologies if we didn't manage to get to your question, but Zahira's done very, very well in getting through as many as we can there. So Zahira, have you got anything to add for today? I'll just give her a quick nudge in the chat box. There we go.
I think I'd just like to conclude very quickly. So thank you so much for listening. I do apologize for the technical difficulties. Unfortunately, technology has not been our friend today, so blame the gods for that. But secondly, I think just from an overall perspective, we can lend to foreign nationals. Doesn't matter what your visa requirements is, doesn't matter where you're based. Please do send them over to myself. I'm more than happy to have a look at them for you. We underwrite our deals up front, so within about 4 hours, you'll get an indicative of where we can do. And in terms of minimum, we can do up to 150, max 3 million on a single loan, 10 million on a portfolio, and we can go up to 75% loan to value. And we can do more complex structures in terms of limited companies, BVIs, holiday lets, HMOs, multi-unit blocks. So very comprehensive list of things that we can do. And we don't have a computer says no model. We have a very holistic model. So please send the deals through, and we'll be happy to support you and your clients moving forward. And thank you. That's me done.
Thank you very much indeed. So just to confirm as well that your confirmation of attendance email will be sent out probably tomorrow, I think, or later this week, and that can be used as CPD. As I mentioned earlier, I'm back for our criteria clinic on Right to Buy on Monday the 21st of March. Yes, Monday the 21st of March. And you can view and book onto that and all of our other upcoming webinars, as I showed you earlier, on our website, which is www.knowledgebank.uk/events, or for subscribers just by using the events tile on the Knowledge Bank homepage. So thank you all again for joining us on the Knowledge Bank Lender Spotlight with MFS. Apologies again for the technical issues that we had earlier. Thank you to Zahira for her time, and I will see you all again next week. Cheers, guys.